Hello and welcome. The focus of this course are the business reports that you see in the business tab where you can actually look at your cash position, you can look at your profit position, and you can look at your asset balance. Now there is a difference between these statements that you're looking at and those that prepare you for tax time. The goal of a tax statement is typically to reduce the amount of income that you would have and report to the government so that you would pay less tax. On the other hand, the goal of your financial statements, including the profit and loss statement, cash flow, as well as balance sheet, is to reflect accurately what's happening in your business so that you can make good decisions. There are two assumptions that follow. First, you should not rely on these profit and loss statements, balance sheets, or cash flow statements in order to assume that you are compliant with the taxing authorities. At the same time, you should not rely on your taxing statements to reflect whether or not your business is profitable or whether or not your cash position is sufficient. Tax statements depend on what entity your company is as well as how you report your taxes. You will want to work with a tax professional in order to assure that Quicken is accurately reflecting on an everyday basis where your tax position is. So Quicken answers very well questions like, was the month of October profitable? Or is our cash position sufficient in order to make a big purchase in December? All of those questions can be answered by the analysis we'll be doing in this course. We do not in this course focus on your personal finances. And that's because we really want to limit the scope of the course so that we can put together a financial statement to determine whether or not we're doing well at our business. Because if our business is profitable, then we can impact our personal finances with planning and professional help. Okay, so with that, thanks, and I will see you in another video.